wouldn't be able to tell that this guy has $180 million. He nailed it perfectly.
I am the reaction.
Did I spend too much time on that intro? Probably. This is Takashi Kodagawa. Kodagawa. I think that's how you pronounce it. He is one of the most famous intraday traders on the stock market who made millions of dollars in the early 2000s. To be specific, he traded from just $13,000 to $153 million.
Are you serious right now?
Yes, you heard me right, 153 million. And what's even crazier, he did all of this in the span of just 8 years. That's fucking insane. How did he find the stocks to enter in? Did he use specific indicators? What strategy did he use? Well, I scavenged the internet for days looking for those exact answers. And I found some secret site releasing his exact strategy. And I gotta say, it's pretty smart. Since I'm the awesome YouTuber I am, I'm gonna share it with you for absolutely free. Let's get straight to it. Now, I recently released a video like this about Larry Williams, who is also a professional trader, and I went over how he made his millions in trading as well, and you guys loved it. I think I'm gonna make this whole go over $1 million trader strategies video a series, because I think that's one of the easiest ways to become successful at trading is by actually learning from people who were actually successful at it. Makes sense. So I'm kinda excited about this. I think we can learn a lot from videos like this. So to understand Takashi's strategy, we first have to understand what type of trader he was. Takashi had specific conditions he was looking for when trying to find stocks to enter in. He was mainly looking for stocks that were in a long-term downtrend, and his goal was to find the exact bottom of that downtrend to then profit from a short-term reversal. Now, as you may know, finding the bottom of a trend is a lot easier said than done. Actually, it's pretty hard, but with the help of his secret strategy, it raises the odds a ton of you finding the exact reversal point. So knowing that Takashi liked downtrends, he really liked bear markets. As he actually stated in an interview, bear markets present the most opportunity, but he also traded in bull markets as well. He just fine-tuned his strategy to whatever the current market sentiment was, which we'll go over how to do that in a little bit, but he mainly preferred bear markets. Now, in the articles I read, Takashi on average was in his trades for about 2 to 6 days, but oftentimes he would hold his position for a week or two depending on the conditions of the market and how volatile it was. But what conditions was he specifically looking for? Well, Takashi actually said this in an interview himself. In the bear market of 2001 and 2002, I would only look at stocks at least 20% below the 25-day moving average, 35% being somewhat safe level to buy at. I also love Trading Lab's YouTube channel. Okay, he didn't say that, but if my YouTube channel was around when he traded, he might have probably said that. But he also mentioned there's a slight problem with this whole concept. Not all stocks are going to react the same, and the sensitivity of the rebound levels greatly depend on multiple factors like market sentiment and the sector you're trading in. For example, a stock is way less likely to bounce at a key level if that day the market is insanely red and everything is dropping. It also depends on the sector. For example, stocks in the tech and biotech sectors are much more volatile than, say, stocks in the utility sector, which are a lot less volatile and don't move as much. So he said a big part of his strategy was finding the right moving average threshold for specific conditions. For example, you would have a bigger gap on tech companies and a smaller gap on utility companies. So with this strategy, there's not really a one size fits all. This requires a bit of judgment from the trader. To help you out a bit, I did some research of my own and ranked the most volatile sectors to the least volatile sectors. Oil and biotech being the most volatile, and utilities and consumer staples being the least volatile. So just keep this in mind when using this strategy. So now that we know all the conditions for using this strategy, let's move on to how to actually find the stocks themselves. But first, let me show you a site called HankerTrade. Ever heard of it? They're a forex and crypto broker that have extremely low spreads and low commissions, some of the best on the market, which who doesn't like saving money on commissions? They also have an extremely friendly support team who will answer any type of question you have. And the best part, they are running a special promo where if you sign up with the link in my description, they will match whatever you first deposit. So if you put in $100, they will match that and give you $100.
That sounds like a deal.
Sign up with my link and make sure you use that special promo. It's free money. Alright, so how do we find the stocks themselves? Now, Takashi didn't really explain this part, but I myself found a great way to do this. We're gonna need to go on TradingView. I'll leave a link in my description if you don't yet use it. We're gonna be using TradingView Stock Screener. I think you need TradingView Pro in order to use this, but if you don't have that or don't feel like paying for it, there are some free scanners out there you can use instead. But we'll be using TradingView for this example. Once you're on the screener, change the time frame to 4 hours. Go to the settings, make sure we're only looking at common stock. These exchanges, price change percentage is below -20, price is above $1, mark the current trading day, and price is below the 20 EMA by 20%. You can also filter out specific sectors if you want to trade stocks in a specific sector. This will give you a full list of stocks in our criteria. Now, Takashi said himself he likes stocks that were gradually downtrending, no sharp movement. So oftentimes from this biggest losers list, you'll have penny stocks that have sharp down movements like this. We want to disregard these stocks. What we are looking for is something like this, where the move is very gradual downwards. So just go through this list and try to find a couple stocks that are gradually moving downwards. Next, we need to figure out the market sentiment. There are multiple ways to do this, but the way that I personally do it is by using my private indicator, tradinglab.ai. To do this, open the private indicator. I will also leave a link to that in the description as well. Now, we want the market sentiment of the whole stock market, not just the stock we're trading. An easy way to do this is by looking at the S&P 500. To do this, go to MT5 and type in US 500. We then want to get a current long-term read on the market. So go to the time frames and make it to one of the higher time frames like the 4 hour. Once you have done that, check the trend table. It will instantly tell you how the current market is trending. If it's green and says strong long, the market is uptrending. If it's red, it's downtrending. This makes it insanely easy to check the current market sentiment, and you don't have to fool around with a bunch of different tools. You just instantly get a read on the market. Remember all of this for later because we will be using it to optimize this strategy. It's even better if you get the specific sector for the stock you're looking at. For example, if you were looking at a company like Google, which is in the tech sector, we would only want to see the market sentiment of that specific sector. To do this, just find a tech sector fund like XLK, which is measuring only the tech stocks. You then would do the exact same process we just did, but just with XLK. Check the table and see how it's currently trending. So that's how you can find the stocks to trade, but what's the actual strategy itself? To do this, go back to TradingView. So we now have the stocks we're looking at. It's in a gradual downtrend and we know the stock sector specific sentiment. We now want to add some indicators to our chart. Go to the indicators tab and type in EMA. Now, Takashi used very specific settings. So go to the settings of the EMA and change the length to 25. Next, go back to the indicators tab and type in RSI and then add it to your chart. Then finally, we're going to add one more indicator, and that is the MACD. We can keep all of these settings at default.
Nice.
So we now have the indicators set up. Now, as said before, Takashi was looking for a big gap between the current price and the EMA. So we want to go to a larger time frame like the 4 hour. We can then measure the gap between the EMA and the current price. To do this, just go to the toolbar on the left, grab the measuring tool, and mark from the EMA to the price. Now, Takashi said he would only look at stocks with a gap bigger than 20% and 35% being more safe. But this is when the trader's judgment starts to come into play. So say if we were looking at the trend table from before and it said bearish, meaning the current market is in a downtrend, we can start to shoot for larger percentage gaps like 30% or 35%. But say if the current market is bullish, we would shoot for smaller percentage gaps like 20% or 25%. This is also when the sector concept comes into play. Same thing, if you're in a more volatile sector like tech or biotech, you would shoot for larger gaps. If you're in a less volatile sector like utilities, you would shoot for smaller gaps. So we found a gradual downtrend, we measured the sectors, and we found a suitable gap. We now move to the next part of the strategy, which is support and resistances. Go to a larger time frame like the 4 hour or daily, mark out all the key levels. You should only mark the very strong levels. So by the time you're done, your chart should look something like this, with very few lines, only marking the the major levels. It shouldn't look like this where you have tons of levels and marking weak levels. We only want the major levels. We then want to wait for price to hit one of these major levels. Now again, this part takes some judgment. If you're in a bear market, price can easily hit one of these higher levels and break right through it. So we would want to wait for some of these lower, more major levels. But say if we're in a bull market, price is more likely to respect these levels and we can aim for some of these higher, less strong levels. So again, there's some trader's judgment with the strategy, but I personally think that's why it works so well. Next, we want to also look at our RSI indicator and make sure the line is in the oversold area once price is by the support. So now that our chart is set up, we're gonna wait for price to hit one of these levels and enter into a trade live. Okay, so it's been a couple days and price hit our level. So we're gonna take a trade live. So price hit our level and we're happy with the current conditions. We're now gonna go to a lower time frame. Takashi himself used the 15-minute time frame for this specific part. What we are looking for is for price to start bouncing, and we want confirmation that it's happening. So in this specific chart, you can see right before the correction, there was a big gap between the EMA and the price. We are also seeing an uptrend starting to form on the smaller time frame, showing a bounce is starting to occur and the chart is starting to gain momentum. As some extra confirmation, we check our MACD, and this is also showing signs that the market is getting ready to turn bullish by the histogram turning green. Once we get all this confirmation on the lower time frame, we can now enter the trade. Now, Takashi said his take profit and stop loss would be dynamic depending on the current market conditions. So in a bear market, we would obviously want smaller take profits. In a bull market, we can have slightly larger take profits. So we enter the trade right here as it's starting to retest this now made support on the lower time frame. What I found works really well is setting your take profit at the next highest resistance we marked on the higher time frame and set your stop loss right below the current low. So we're now in the trade and we can wait to see what price does. A couple days passed, and as you can see, this trade went perfectly as planned and price bounced exactly where we thought it would and hit our take profit with ease. I think this strategy works really well as the proof is in the pudding, and Takashi made his millions doing exactly this. And I think one of the major reasons it does work so well is because it goes off current market conditions, not just a one size fits all strategy like most trading strategies on YouTube. Try it out, DM me on Instagram and share with me how it works for you. Thanks for watching, and I'll see you guys next time.